What will the value of 5 Tesla stocks be in 2026? Numerous problems have been circulating the world, which has an impact on the economy and raises the possibility of problems like inflation and recession. Predicting a stock could be a little difficult. Watch and listen to see what analysts predict for Tesla over the coming years. The COVID-19 pandemic had a significant influence on people's livelihoods and health throughout the world, which in turn had an effect on the global economy. Because of that, at the time, Tesla and other businesses suffered. Experts revised their estimates in light of the information at hand. You will discover today the 2026 valuation of 5 Tesla stocks. In 5 years, that is by 2026, we believe that not only will Tesla take the biggest share of the electric vehicle market, but we also believe that it could take 20 to 25 share of the total auto market, says star stock picker Cathie Wood, founder, CEO, and CIO of ARK Invest, a company with $60 billion in assets that makes investments in cutting-edge technologies like genomics and self-driving cars. That indicates significant growth for the business and its stock, which will delight investors, no doubt. Indeed, according to Cathie Wood, Tesla will be valued close to $5 trillion by 2026. Star investor fund ARK Investment Management has placed a significant wager on Tesla, an electric car manufacturer. The price per share of the 2010 initial public offering was a mere $17. As of March 4, 2024, a $1,000 investment in Tesla made nearly 10 years ago will be worth more than $36,000, according to CNBC calculations. Calculations show that over the same period, a $1,000 investment in the S&P 500 would have yielded a total return of somewhat over 281%. As of March 25, 2024, a $1,000 investment started in March 2012 would be worth $148,755.87, or a gain of 14,775.59%. Furthermore, price increases are included in this return, while dividends are not. Over the same period, the S&P 500 gained 223.54, while the price of gold increased 13.37. Analysts, on the other hand, anticipate that Tesla will continue to rise. However, 10 Tesla shares purchased in June 2021 for $6,940 will be worth roughly $7,500 in June 2024, or $540 in earnings. Despite numerous forecasts suggesting that Tesla stock would continue to decline, this is a noteworthy rise. This may be primarily ascribed to Musk's distinct management style and the fact that the EV company is leading the industry in both innovation and R&D. Tesla is now working on a number of exciting new projects that are highly anticipated. It appears that these projects will increase the company's income and revenue, which will have a good impact on the stocks. Tesla is now hard at work on a number of projects before releasing them to the public, including the Starlink project and the FSD Cybertruck iRobot, Optimus. Similar to how they did with electric vehicles, Tesla will undoubtedly be at the forefront of the AI revolution after they have successfully introduced AI projects into the world. The price of the company's stock will undoubtedly rise significantly if this occurs anytime soon. Prior to the market explosion, Tesla stock was only worth a little over $100. After that, it doubled, tripled, and multiplied tenfold. Investors in Tesla stock owning 10 or more shares may see their money quadruple in a matter of years if the same outcome with the introduction of AI is achieved. Indeed, from its 2024 open-source Tesla model that predicted their worth of $3,000 per share in 2025, Cathie Wood's company ARK Invest provided an updated valuation model that values Tesla shares at $4,600 by 2026. They revised their position in response to significant developments, such as estimations of capital efficiency, assumptions and inputs related to autonomous ride-hailing, and the forecast's one-year advance to 2026. Based on their examination of consumers' perceived value of time, ARK Invest has updated their model, which includes new estimates for the overall market for autonomous ride-hailing at each price point, and the likelihood that Tesla will solve for completely autonomous driving. They anticipate greater demand than initially predicted for autonomous ride-hailing at more expensive price points because to ARK's growing confidence in Tesla's capacity to accomplish fully autonomous driving. They must be informed of the ways in which the robotaxi industry contributes to the model. Despite their previous predictions that Tesla will never be able to introduce autonomous ride-hailing, they have since changed their minds in response to recent encouraging developments from the company, assuming that it will launch in 2026, 4 years later than Musk had anticipated. The revised model by ARK Invest also improves Tesla's capital efficiency. When the Model 3 was scaling up in 2017, Tesla's capital investment per incremental unit of capacity was approximately $84,000. By the time the 2017 model was released, that number was closer to $7,700. According to their estimates, Tesla will invest between $6,000 and $8,000 for each additional unit of capacity by 2025. Given its significantly higher capital efficiency than anticipated, it's probably realistic to project that Tesla will invest between $2,000 and $7,000 for each additional unit of capacity by 2026. Do you think you could purchase Tesla shares right now? Please share your thoughts with us by posting a comment below. If Tesla launches successfully in 2026, the predicted value will be the mean of the 1 million simulations. The year that Tesla eventually introduces robotaxis will have a significant impact on those simulations. Tesla launches a vertically integrated human-driven ride-hailing service, but does not establish a robotaxi network in the majority of ARK's lowest price per share scenarios. In other situations, Tesla does not launch either service. Although the business hasn't made a formal commitment to start offering human-driven ride-hailing, ARK has already discussed the tactical and strategic benefits of doing so. Crucially, ride-hailing services operated by humans have the potential to generate a healthy, steady income stream prior to Tesla introducing a fully autonomous service. ARK anticipates that its human-driven ride-hailing cars will eventually shift to the autonomous ride-hailing network in the event that Tesla offers a human-driven ride-hailing service and finds a solution for completely autonomous driving. While working toward complete autonomy, Tesla may still introduce a human-driven ride-hailing car if it is unable to establish a robotaxi service in the allotted 5 years. According to ARK Invest's published paper, we believe our Tesla model is methodologically conservative, even though it is tuned to our expectation for 2026. In 2026, we predict that Tesla stock will behave more like that of an established business than a fast-growing one. Taking into account the changes in their most recent model, ARK's overall price objective for Tesla is $4,600 per share in 2026. According to the bull and bear scenarios, Tesla's 2026 share price may be approximately $2,958 and $800, respectively. Naturally, the company's stocks rise in response to any positive news. Everyone is pleased with this, including the Tesla staff, investors, and customers. In fact, according to many analysts, Tesla's stock could rise by an additional 50% in the next years due to its superior growth. We think the operational outlook is better than it has ever been. Earlier, Patrick Hummel, an analyst at UBS, said, "We expect Tesla's vertical integration in semiconductors, software, and battery to result in superior absolute growth and profitability in the years ahead." He cites substantial order backlogs and 2 new gigafactories in Texas and Germany as evidence that Tesla's operational momentum is another reason to be optimistic. The market continues to underestimate how much more profitably and rapidly Tesla will outperform its rivals. In fact, despite a sell-off, many Wall Street analysts are still bullish on Elon Musk's electric car company because of its enormous upside and potential for long-term growth. Over 50% of Wall Street analysts who follow the company's stock are still positive about its potential for long-term growth. However, Garrett Nelson, vice president and senior equity analyst at CFRA Research, asserted that Tesla will remain the dominant player in the rapidly expanding electric vehicle market and reaffirmed Tesla's strong buy status in early June, setting a price target of $1,200 per share based on the company's potential for long-term growth. But bear in mind that these forecasts and presumptions could alter based on the state of the economy, which has an impact on stock and market values. Nevertheless, these forecasts are really relevant to take into consideration because they were produced by professionals with a great deal of knowledge. Their assessments and forecasts are the result of their own in-depth analyses of the data that is currently available, careful thought, and in-depth analysis of the movements of the Tesla stock, as well as recent advancements made by the EV company. It should come as no surprise that investors and experts closely monitor the movements and advancements of Tesla stock. Investors are still lining up to purchase Tesla stock, despite the fact that it has fluctuated like any other company in the market and is expected to continue growing in the future. Check out our channel and other videos for more information about Tesla stocks.